Good afternoon. Well, as we start the new week, I figured it was time to add another video. So I'm going to talk about a couple of things today. One, I want to address the Berkshire Hathaway meeting from the weekend. Warren Buffett did his first virtual meeting. Two, I will also reiterate what I said about airlines and some of the at-risk sectors. And three, I have a couple of charts I just want to pull up. So it's really, today is just a quick hodgepodge of kind of sort of where we stand. I do want to make one comment which seems to be repeating in emails and text to me, and that is, with unemployment skyrocketing, soaring, why isn't this a Great Depression? Which is a great question. So with that, I will say, I hope you and your family are safe, you're healthy, and you're staying sane, as difficult as that may be right now. Let's start with why this is not a comparison to the Great Depression. First, not to offend anybody, but I think comparing almost anything to what this country went through in the 1930s is an insult to all those people who actually survived the Great Depression, because there's nothing on a modern scale that remotely comes close. So if you think about it, the crash of 29, people were putting up $5 and controlling $100 of stock. So when the crash happened in 29, all the individual investors got wiped out. And then when their brokerage firms came for the money, the brokerage firms didn't get it, so they got wiped out. And the brokerage firms also borrowed from banks, and they were starting to get wiped out. We don't have anything like that today. So just from a financial end, you could almost make a case there's some mild comparison to the '08 crisis, but today there really isn't. Yes, unemployment is, when all said and done, will likely be above 20%. Maybe it's 25. I don't know what the number is going to be. But remember, this was a government-induced shutdown. The government turned off the economy. This, unlike almost every recession previous, where human behavior, investor behavior, corporate behavior, that all greatly contributed to the problems. Here, most people who were damaged through no fault of their own. There was not this risky behavior going on. Sure, you could say, as I wrote about, from mid-November all the way through the end of January, we had an historic level of giddiness and optimism and outright greed in the financial markets. But that certainly would never lead to unemployment soaring to 20+%. Unemployment was at record lows in the middle of February. So just that alone throws the comparison to the Great Depression right out the window. We also, listen, in the Depression, the middle of the country where we were growing our corn and our wheat and our soybeans, Mother Nature wiped that out. We had a rapid period of cooling, and we lost all those crops, hence the food lines. Yes, we've got some supply chain issues with perhaps beef or chicken, but it's not because we don't have the chickens on the farms or the beef to slaughter. Frankly, there's an issue in the chain, not that there's a actual shortage of that commodity. So, and that will go away sooner than later. 1930, don't forget, Smoot-Hawley, where the government decided to put protectionist tariffs on global goods. Yes, I know Trump is saber rattling and throwing another tariff tantrum, but I don't think it's going to be anywhere near, I don't think it's, may not even happen at all, but certainly if it does, it's on a small level, not like Smoot-Hawley. Also, we didn't have the global sovereign debt crisis like we saw in 1931. Now, that one may be coming in 2021 or so. So that one may hold some validity, but overall, this is not another depression. And frankly, if you can't find, there's no economic definition for a depression. Until 1930, every economic bout of weakness was called a recession. And the early 30s were so bad, they said, well, this is not a recession. They said it was a depression. And then they revised it, calling it the Great Depression. In any case, okay, let's go on. Warren Buffett held his annual meeting in Omaha, Nebraska. Berkshire Hathaway, you all know who Warren Buffett is. And Twitter was abuzz that He made no big purchases during the crisis. Very, very atypical behavior. And he was candid. He had offers, but if you remember in '08, he waited until companies were absolutely desperate for money, and he cut himself such an outrageously preposterous deal with people who were vying for their corporate lives. That's how he makes those deals. People don't come to Buffett when they're sitting on a mountain of cash and say, hey, Warren, come invest in my company. They do it out of utter and sheer desperation. We were on the way to have utter and sheer desperation in March. What happened in March and early April? The Treasury and the Fed, they didn't take out bazookas and they didn't take out laser-guided missiles. They took out the entire nuclear arsenal and fired it on the problem. So companies may have been going down the path to do a deal with Mr. Buffett, but the Fed stepped in the way, and Buffett was clear. The deal wasn't good enough, so I didn't make one. And sitting on $134 billion of cash, he who has the gold makes the rules. So he decided not to do anything. The selling of the airlines, it's the third time he's owned airlines and the third time he's been wrong. What do we know? He's clearly not a good airline investor. Warren Buffett is not good at all kinds of investing. We know he does not invest in airlines well. To his credit, he saw he was wrong, pulled the ripcord, and sold his stakes in the 4 major airlines: American, United, Southwest, and JetBlue. So I think those are the 4. In any case, give him credit. He was wrong. He got out, took a loss, and moved on. I thought he was going to make some kind of deal with Boeing or Federal Express or UPS. He didn't, because the deals weren't there. Boeing was the most likely, but clearly the new CEO, Dave Calhoun, was not doing a Buffett deal. And now I hear everyone talking about, well, Buffett was so negative. He's so bearish. What does that say about the economy and the markets? I think he's being realistic. He couldn't find the normal Buffett values that he would typically invest in. He doesn't invest in things he doesn't understand. So for those people looking for him to go into some far-flung areas like, I don't know, cruise lines, where those cruise ships don't fly American flags, they fly other flags, and they don't hire American workers for the most part. He wasn't going to do a rescue deal where he didn't have an edge, didn't understand the business. So I applaud him. But I also don't think that Warren Buffett woke up and said, wow, the world's a really bad place. I think he recognized what everyone else is thinking about. Whether you're in the camp of a V-shaped recovery or you're in the camp of something else. You know, I'm not in the camp of a V-shaped recovery. This morning on Yahoo Finance, I said I thought the recovery would not look like any letter in the alphabet. It was going to be something more complex. I stick by that. I think the one side is going to be a V. We've come down and we collapsed into early April, and the economy will bottom this quarter. We will recover sharply, somewhat like this, and then we're going to do some sawtooth thing. I don't know what letter that is. Maybe there's a letter in another language, that a Russian language or an Asian language I'm not familiar with, but that's what I think about the economy and Buffett. I've railed against the airlines for the past 6 weeks. I'm not going to reiterate the whole thing. You could not pay me to offer the airlines a bailout. I said it before. I think it's preposterous. They've done everything legally, but this is the third time they're begging for a bailout, and they got one. I thought it just rewarded bad behavior. They legally bought back the stock instead of created a bigger rainy day fund. Okay, so they enriched their shareholders and certainly the corporate executives, and now they fell in hard times and are begging and whining and crying for a bailout. Well, if it was me, I'd force the first one right into Chapter 11 bankruptcy. It doesn't mean you close the airline. Chapter 11 bankruptcy means the company can reorganize. They don't pay their debts immediately, but they reorganize and they come out leaner and meaner. And that's where most of them belong. If they can't make deals in the public to get money, the government shouldn't be writing checks to airlines who had exhibited poor corporate behavior, I would say. All right, now I'm going to share my screen and close with 2 things. So let me do this properly. Okay, good. So the first one you're looking at, I'll make this a little bigger. So this is a chart of the Dow. You've seen it before. I just want to show you, you've had this enormous decline from high to low. Let's round and call it 35%, whatever the number actually is. I won't nitpick right now. We had our first bounce target in between the blue lines, which that first bounce off the low was textbook. It was beautiful. And then we came back down. And then we rallied again into, and the Dow recovered between 50% and 62% of what it lost, which is very typical of whether you want to call it a bear market rally, the first leg of the bull market. Let's not worry about names at this point. It's not relevant, but you can see that we got somewhere between half and 62% of what we lost. Very, very typical. I would argue that right now, the high we saw last week, which in the Dow was just below 25,000, that seems and feels like a logical temporary ceiling, and that the market is entering a trading range where we're going to go sideways, perhaps bound by 25,000 on the upside on the Dow, and perhaps 22,500 on the downside, roughly 10% range. And that would allow some of the data to catch up with where the market's gone. I think it would be healthy, normal, routine, and somewhat expected. If you look at the S&P 500, kind of sort of the same. The S&P was a little weaker during the first bounce, but during the second bounce was much stronger, and it peaked roughly 29.20, recovering 62% of what it lost. And I would say the same thing. The best thing would be that's a peak. We have a floor at 2650, and the S&P bounces between 2900 and 2650 on the downside. I think that'd be healthy. Let everything calm down, continue to calm down, and let things catch up. So that's my thinking there. And I am going to add one more thing. Let's do this. Let's stop sharing this for a minute. And then we're going to share another screen. And there it is. So this is the S&P 500 in the top chart. And this is the ratio of advancing issues on a given day. So I have I'm pointing to my screen like you can see my finger pointing. But in any case, there's a horizontal line at about 70%. And what I'm showing is 3 times we've had for 3 days in a row, the percentage of stocks going up was at least 70% since the bottom. That is also known as a thrust. And it's important. It's almost like a little buying stampede. Buying stampedes typically do not occur in ongoing bear markets. They typically occur at the beginning of bull markets. Again, I don't want to get totally wrapped up in what you want to call this. I mean, the odds say now that the March 23rd low was a low of major significance. Could we go back down there in the future? Sure. I said the same thing about Christmas of 2018. That was a low of major significance. But we do have these thrusts, these buying stampedes, and buying stampedes typically don't happen during bear markets. And when they do, they're right at the end. So again, markets are behaving much better. We don't see this walk in the morning, go, holy geez, we're down 5%. Things are healthier. Today is Monday, May 4th. And if we can get the market to be down today, that'd be 3 days in a row down. Tomorrow is Tuesday. If you believe in the whole turnaround Tuesday phenomena, which does have some merit, 3 days down going into turnaround Tuesday would certainly be a plus, give the market a little tailwind. I do think we could bounce second half of the week as early as Tuesday, but I don't think yet that we're ready to soar above last week's high. I think we get a short-term bounce, pull back, continue to wring out all this huge volatility in the markets. And now I'm going to unshare my screen. Okay. So that's it for today. As usual, I said it's going to be a nice, short, quick video, and it's a little longer, but those are my thoughts today. Again, I hope you're staying safe, healthy, and sane. I've got a little bit of a sunburn because we did a lot of yard work this weekend, spreading mulch and starting to plant grass and washing my car. So I forgot to put sunblock on for the first beautiful day of spring in New England, but I won't make that mistake twice. Again, I'll be back. My Street Smart should be done the next day or two, but this will give you a pretty good update. Again, hope you're doing well. Feel free to, my buddy Tiny always says, if you like the video on YouTube, please give it a thumbs up. I forgot what else he said, but I'm sure he'll email and criticize me for not doing what I should be doing. But please like the video and share it if you are so inclined. Thanks. Take care. Bye-bye.